HUL, that's the top Nifty loser today, down over 2%, now recovered from the lows actually, and the company is expected flat to low single-digit growth in their second quarter on the back of disruptions following the GST rate cuts. A recovery is seen only by November.
BEL, that's the top Nifty gainer. The stock rallies close to around 3% after the Indian Army issues a tender worth 30,000 crore rupees for quick reaction surface to air missiles.
The stock of Sunteck Realty rallies up around 3%. Now the company is set to launch its ultra-luxury projects in Mumbai and Dubai. The units will be priced in excess of 2.5 lakh rupees per square foot.
Dollar Industries board approves the merger of 9 promoter group companies aimed at vertical integration to boost manufacturing control. The stock is higher by over 2%.
And Saman Cap was higher in the morning, continues to stay higher, up around 8%. The stock out of the F&O ban list.
Hello and welcome to Chartbusters. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Mangalam. And green is the color of the day. After a while, we are uniting. So it appears, Mangalam, the street is giving a thumbs up.
Market likes that, the street likes that. 6 days of decline is what we saw in the Nifty. There were oversold conditions. There was belief that, the market would move higher. The good part was that the GIFT Nifty, which was indicating a 120-point uptick, actually the market did not go as high as that at open, gave, entry levels or entry opportunities to the bulls, and now we're at the higher end of today's trading range so far, so that's a positive. The mid-cap's doing a lot better, so we have the mid-cap index come up for you on the screen as well. But amidst all of that, we do have a bunch of stocks that are gaining. The Nifty gainer, the top Nifty gainer today is BEL, after the Indian Army has issued a tender for air defense missiles, and BEL seems like one of the front runners for nearly 30,000 crore rupees worth orders. Ria joins in with more details on this one. Ria.
Well, yes, Mangalam, the Indian Army has issued the rupees 30,000 crore tender to BEL for buying the QRSAM air defense missile systems. Now, the Indian Army is set to procure around 5 to 6 regiments of this indigenously developed system called the Anant Shastra. And remember back in May, shortly after Operation Sindoor, the DAC had cleared the procurement proposal for this project. Now, on the back of this, Motilal has come out with a note on Bharat Electronics. They have a buy call on the stock with a target price of rupees 490. Which is an upside of around 24% from yesterday's closing price. Now, they say that BEL will be the lead integrator for this project, and they expect execution to commence primarily from FY27 onwards. They've also said that this order now enhances BEL's order book to more than rupees 1 lakh crores now. And along with this order, they also expect the company to benefit from other orders for next-gen corvettes, electronics warfare, and follow-on orders for electronics for the 97 Tejas Mark 1A aircraft as well. In addition to this, they also expect orders for some loitering munition programs as well as export opportunities, which will be in the company's favor. Now, they are expecting these orders to help the company sustain a 15 to 17% revenue growth over the next 5 to 6 years. And over the next 3 financial years, they are expecting a sales, EBITDA and net profit CAGR of 18%, 17% and 17% respectively for the EBITDA and net profit. And they're also expecting some awards for missiles for the QRSAM project to go through to Bharat Dynamics. So on the back of this, both of these stocks have been in focus today.
All right, take that point, Ria. Thanks a lot for that. Just before we slip into a short break, just keep an eye out on a couple of these stocks. While, we have 2 stocks advancing for every stock which is declining, a couple of those, gainers in the past have now come in for some bit of selling. Dixon Tech is one of them. Dixon Tech is actually currently at the low point of trade, down about 3.5%. So keep an eye out on that counter. The other one, which is, looking lower, is Latravenues Tech, which is basically Ixigo. That too continues to see a bit of a sell-off, currently at the low point of trade, with volumes piling up on that stock as well, both of them lower. But by and large, the market's doing a lot better. Let's get in the management of V2 Retail. Akash Agarwal, who's the whole-time director, joins in on the other side to discuss a whole host of things: the GST rate rationalization impact, some updates on festive demand, and what the outlook for the remainder of this year is. Akash Agarwal of V2 Retail on the other side. Welcome back. A bunch of stocks that are doing well this morning. They're the IT pack. So look at Wipro, look at TCS, look at all of them. They're doing a lot better. Remember, after all of last week's decline of 8% on the IT index, it's starting out on the positive note. So that's something that the bulls would like. It is expiry tomorrow as well. So to that extent, the IT index and the Nifty Bank will be extremely crucial. But a whole host of consumer-facing stocks are all on our radar. We have the management of V2 Retail joining in. The stock's doing well this morning. Akash Agarwal, who's the whole-time director, joins in. Three main focus points: early festive season sales trends, the impact of GST cut on incremental sales, and finally on store expansion and margin targets that the company will give us as well. Akash, thank you so much for joining in. And that really is the first question. You know, when we saw the first quarter numbers, they were obviously impacted by a high base or the Eid shifting in the previous quarter. But like for like, same-store sales growth was close to around 10%. How has the second quarter fared, especially given the problems that we saw with rains and with the GST cuts? A lot of companies are facing some transition issues. So how has the second quarter fared for you? What is your revenue and same-store sales growth likely to be?
Yeah, hi, thanks for having me. So we have seen a consistent momentum in terms of sales, same-store sales growth. And in terms of GST cut, I think it's too early to say because it's just been 6 days since the rollout. But all the indicators are pointing towards a very positive outlook. And third quarter is going to be very crucial because the next 3 months is the highest grossing quarter for us. So we will find out better in the next 3 months. But current festive trends, we are doing better than the guidance of 8 to 10% SSSG that we've given to the market.
Okay, all right. Could you tell us what is your pricing strategy, though, Akash? For say products that between 2,500 to 2,600 rupees, because now with the GST rationalization, you have an opportunity to adjust prices, such as to take advantage of that, and in turn, it would help you all in terms of growth. So, pricing strategy.
Yes, so we have already passed on the benefit to the consumers. We have already changed the MRPs for all the pending orders, as well as all the inventory at the store. But that contributes to only 6% of our total sales. Already 94% of what we sell is below the 1,000 rupee MRP. So we are not beneficiaries in terms of direct price cuts, but definitely in terms of customers having more disposable income and all the savings that they make spending on other products. So overall, the consumption should increase.
All right. You said that the second quarter same-store sales growth is similar to the first quarter. First quarter on a reported basis was 5%. Do you think the second quarter was that much, or are you looking at the 10% mark?
So that is because of the shift in Eid.
Yes.
So our guidance has always been 8 to 10% SSSG, and any double-digit SSSG on such a strong base is a very good number, and that is what we're targeting. And we are on track to deliver that.
And for the full year, revenue value growth would be what? Last year, obviously, you did closer to 1,900 crores on the top line. This year, what's the kind of revenue growth that you're targeting with double-digit SSSG?
So at least a 50% revenue growth is what we're targeting. And hopefully we deliver more than that.
Good to hear. You're sounding quite confident, Akash. What about store additions? Could you tell us what's the plan for this year? I think in quarter one, you added 27 stores. So for the year, what is the plan and outlook on margins?
So the initial plan was about 100 stores, but looking at all the positive response that we've got from all the newer stores and a very strong performance in the older stores. So I think we're going to open 120 to 130 stores this year.
Okay, all right.
That's aggressive. Just a couple of things. You had that enabling resolution for a 400 crore rupee QIP. Will that be put to use for store expansion? And by when do you hit the markets for this QIP?
So that is just an enabling resolution that has been done. Right now, we are busy with the festive season. The details and the decisions will be taken on that later.
Okay, all right. By when?
Again, nothing has been finalized. It's just a board approval.
Okay. For the time being, it's a board approval. If the need arises, you'll go ahead and you'll use it. Is that correct?
Exactly.
Got it. All right. Give us a few more details. Net working capital days, it's come down a little bit. It was as is under 40 days. It's come down to around 34. What is the rough range you'd like to maintain?
So the net working capital should hover between 35 to 45 days because the inventory days that we target is about 90 to 100 and the average credit period that we get from our vendors is about 50 days. So this is what we're targeting. But if we are more efficient in the future and the sales per square feet increases in the future, then it might reduce by 5 to 7 days.
What is the sales per square feet target? Because first quarter was slightly under the 1,000 rupee mark. You have a guidance of 1,200 rupees for the full year of FY26. And by when do you reach the 1,400 mark? Because these are important milestones that you've spoken about in the past as well.
So 1,200 is not the company average that we're targeting. That's the old store target. Because newer stores always start at about 70% of throughput of the old stores. And we're opening more than 100 stores this year. So for the company level, the target is to move to 1,200 in the next 2 to 3 years.
All right, next 2 to 3 years. And what about margins? We didn't get that number from you. 50% revenue growth, 8 to 10% SSSG, 125 stores is what you're adding. Net working capital days between 35 to 45. Margins, how much will they be?
So we always talk about pre-Ind AS EBITDA margins because that's the relevant number for us. And it should be in the range of 8.5%.
Okay, final question before we let you go. Bihar elections. The next 45 days is going to be interesting on a political front. But for you all, for business, what does it mean? In the run-up to the elections, do you see increased demand? Or, how do things normally play out? And if you could give us your rough exposure to Bihar?
So historically, it's been a mixed batch. Sometimes there are a lot of disturbances that affects sales in the negative manner. And sometimes we see an increase in consumption. But overall, there's not much significant impact. And hopefully there are no disturbances in terms of sales. And the momentum can continue.
And what is your exposure to Bihar? How much of your sales come from there?
We have about 40 odd stores in Bihar. So it should be contributing anywhere between 25% of sales.
Okay. I like the way you put it, disturbances. I'm wondering whether it's based on the outcome or the party that's ahead. That'll be interesting. Bihar, always an interesting election. Well, we appreciate you joining in, Akash, giving us all these details. For the time being, you're sounding extremely confident about business on growth, on store addition, as well as on the profitability front. We look forward to chatting up with you post Diwali.
Yes, Nigel, and most importantly, I'll be looking forward to when the QIP happens as well, because if you look at their shareholding pattern from a domestic institutional fund, you have Motilal Oswal, which has been upping the stake in the company, and at some point they will hit that 10% ceiling level that will come by. So will there be other funds that join in and not, or something that we will be tracking very closely on V2 Retail? Has been a big gainer from a stock standpoint over the last 2 years or so. So we'll watch out for that. With that, we'll take a short break. As we do that, some good news for our viewers pops up right here. India's business news leader is just a click away. It is the all-new app, CNBC-TV18's all-new app, which gives you instant access to breaking news, in-depth articles, and financial world updates, all of them at your fingertips. All you can do is download the app right away from the Apple Store or the Google Play Store, or just scan the QR code, which is up for you on the screen.
Welcome back. Well, the start has been good. However, you'll want to hold on to these gains. That's going to be extremely important because now we are still sitting with a gain of around 90 points. You've slipped a smidge from the high point of the day. But you'll want actually us to hold on to these gains given the kind of selling that we've seen in the last few days. In the last few minutes, Adani Ports has moved to the day's low. And SBI Life, that's the other one that slipped a little bit. So I think the intraday chart of both those two come up for you on the screen. But let's get a technical check going. Shivangi Sarda from Motilal Oswal Financial Services joins us on the show. Hi, Shivangi. Good to have you on the show. What's your take? The markets have bounced. Do you think it's short-lived? And will you be looking to add short positions or buying some puts?
Very good morning, Nigel and Manglam. Thank you for having me. So we've seen that there has been some sort of a relief rally in today's trading sessions after 6 red candles that we've seen on the Nifty chart. Now, of course, some of the data points, India VIX had risen 15% last week, and the put-call ratio had sunk to 0.6 levels. Now it's again jumping back to 0.8 zones. But then again, we've seen that there has been some amount of, unwinding on the call writers position, but the expiry perspective, there will be a lot of volatility expected as it's monthly expiry tomorrow for this index. But the key levels to watch out would be, 24,600 on the downside, and the upside we're looking at 24,950 as the hurdle for Nifty index. So likely to remain in this range, but overall there will be some sort of short bounces that one can capture in the index. Talking about the bank Nifty, we've seen this banking index has been relatively outperforming in terms that it did not fall as much as compared to the broader market. And we've seen that the indices have relatively held on to 54,250 marks. So this would be an important level as a support. And for the upside, we're looking at 55,000 as the next hurdle. And focus would be on the smaller banking names, which have been contributing to the strength in this index.
All right, we take that point. A lot of these cash stocks are surging in with a lot of volumes backing them as well. So pull up something like a coffee day. That stock's up around 4.5%. We've seen some traction in specialty restaurants as well, up 9%. And the volumes on that are nearly 6 times what we see on an average day for specialty restaurants. That's the one which is up for you at around 138, up 9%. And Shalimar Paints is the third one, which again is topping the volume list, has already done more than what it usually does in over the fortnight in just 1 hour of trade today, 10% higher on that one. Shivangi, individual stocks, if you could quickly name some of them for us.
So on my radar, first up is Canara Bank. That we've spoken about how a Bank Nifty has been outperforming, and Canara Bank has been one stock which has resiliently held on with higher bottom from the last 4 weeks, which clearly indicates that this is moving despite the market weakness. And we've seen a little amount of retracement, but a good support taken near 117 levels. So this one is getting ready for a good up move. Now, talking about the data points, we've seen that, the rollovers have also come in quite positive for this one. So expecting a good move here for the next targets of around 125 and a support of 117 levels. And the second pick on my radar is HAL. We've seen defense back has been in momentum from the last 3 to 4 weeks, and HAL has consolidated at the higher zones from the last 4 trading sessions and is now getting ready for a good up move. The volumes have been significantly high in the last 2 trading sessions, which indicates that buying is emerging at these levels. Also, there has been a cool off in the IVs along with unwinding of the call writers at the higher zones. So overall, looking quite positive data-wise as well. So now we're recommending a buy here with a target of around about 5,000 levels and a support of 4,700 levels.
Okay, all right. Thanks a lot for that, Shivangi. Well, on that note, though, we'll have to wrap up on this edition of Chartbusters. You stay tuned. Trading Hour comes up next.